If you are a business owner that does any work from home and you're not taking the home office deduction, then you're probably paying more than you have to in taxes to the IRS. But don't worry, you're not alone. More than 2 million people overpay the IRS every year. So if you want to keep doing that, then don't watch the rest of this video. But if you want to take the home office deduction on your tax return, then I'm going to give you all the information you need to do this correctly in this video. All you have to do is be a business owner or independent contractor, meaning you receive 1099 income, or in other words, the income you receive is not taxed upon receipt. And if that's you and you work from home, then get ready to lower that tax payment to the government. Hey, it's Sherman again at Life Accounting, back at it again today to help you save more money on your taxes. In today's episode, I'm going to help you do this with the home office tax deduction. I'm not just going to tell you what this deduction is, but I'm also going to go over a calculation to help you do this during this video. So if you're ready to save some money, go ahead and like this video for me and subscribe to our channel if you want to save more money on your taxes. All right, so let's jump in. So what is the home office deduction? According to the IRS, the home office deduction allows qualifying taxpayers to deduct certain home expenses from their tax return. Now, of course, this is the IRS we're dealing with, so we need to make sure exactly what they mean by qualifying taxpayers and what certain home expenses you can deduct. By the way, when we say deduct, we mean lower your taxable income. So for example, if you made $10,000 in income and deducted $1,500, then you'd only pay taxes on the remaining $8,500 and not $10,000. Anyway, who qualifies for this deduction and what can you deduct? Okay, so here's who qualifies. First of all homeowners and renters qualify for the home office deduction as long as you're not trying to claim the deduction as an employee. Employees are not eligible for the deduction. So if you receive W-2 wages and you want to use this deduction for business, then you would not qualify for this deduction. But if you are not an employee and own a business or operate as an independent contractor, then you would be a qualified taxpayer. So that's who qualifies, and if that's you, you're probably wondering, what can you deduct? Here's what you can deduct: your mortgage interest, rent, property taxes, homeowner's insurance, HOA expenses, utilities, and even depreciation. But depreciation is a little bit more complicated. So I'm going to create a separate video to discuss depreciation, so be sure to subscribe to our channel. But before we get to that, we need to discuss something far more important, and that is one simple question: how much? How much of your mortgage interest, rent, and so on can you deduct? Is it the full amount or a portion of the amount or just a flat fee? Here's the answer: it depends. It depends on the square footage of your home that you are using for business purposes. The IRS provides two basic requirements to determining this. First, you must use an exclusive portion of your home for conducting business. So you can't deduct your bedroom as a home office expense because you don't exclusively use your bedroom to work on your business. But you can deduct the portion of your home that is exclusively used for your business. Can you guess what that might be? You've got it: a home office. All right, the second thing that the home must be is the principal's place of business. But wait, does this mean that if you have another business address that you can't use this deduction? No, not exactly. The IRS's website specifically states that a taxpayer can also meet this requirement if administrative or management activities are conducted at the home and there is no other location to perform these duties. And I don't know about you, but that kind of sounds vague to me. So they go on to say that anyone who conducts business outside of their home, but also uses their home to conduct business, may still qualify for a home deduction. Now here's my take. From what I've researched, the IRS used to be strict on this rule, but then there was a court case where a doctor claimed the home office deduction even though his home was not his principal place of business. Long story short, the doctor won the court case and could claim the deduction for the work he was doing at home. So get this, now they're calling this the administrative use exception. Now, I can't legally advise you in this video in terms of what you should do or not do in your unique situation. So be sure to ask your CPA, aka Life Accounting, to file your business taxes to make sure you're using this deduction correctly. But anyway, there's still one big thing we need to discuss here. How do you calculate your home office deduction? Let's go over the two ways you can do this. According to the IRS, there are two methods to calculating your home office deduction: the simple method and the regular method. The simple method is very simple, so simple that it doesn't save you much money. Basically, with the simple method, you can deduct $5 per square foot of the business use of your home. But here's the kicker. You can only do this for up to 300 square feet. This means that the maximum you can deduct under the simple method is $1,500, and that's if you have a 300 square foot home office. But what if you literally have a 1,000 or 2,000 square foot office that you use exclusively for your business? What if you store all the inventory in your basement? Or what if you work in your garage like Steve Jobs, or make products in your kitchen? Or here's another way to look at it. What if you have just a 300 square foot home office, but the portion of your home expenses for the year exceed $1,500 by far? If this is anything like you, then you should use the regular method to calculate your home office deduction. The regular method takes the exact square footage of your home office and divides it by the total square footage of your home to find the percentage of your home that is used for business. Then it applies that percentage to all of your home expenses to find the direct expenses that are applicable to your business. So let's walk through a simple example to understand this. Let's say you own a 3,000 square foot home. And let's also say that 1,000 square feet of your home is used for business purposes. Well, 1,000 divided by 3,000 square feet is 33%. Then let's leave the 33% there for a second and let's add up all of your monthly expenses. Let's say your mortgage or rent is $2,000 per month, plus $500 for utilities and other home expenses. So let's just call it $2,500 a month in home expenses that you have. Now, since you're filing your taxes for the whole year, you'll multiply your home expenses by 12. So 12 times $2,500 equals $30,000 for the year. So you have $30,000 in home expenses, and 33% of your home is used for business. So to find out what your home office deduction is, you'll multiply your $30,000 in home expenses by the 33% of your home that is used for your business, which would mean your home office deduction for the year would be $10,000. Now, $10,000 is a whole lot different than $1,500, isn't it? I wonder what kind of home office deduction Jay-Z and Beyonce are taking for the big mansion they bought for millions of dollars. Anyway, before I get carried away here, let's summarize the major parts of this episode so you can start claiming this deduction. Today we discussed the home office deduction in detail. The home office deduction allows qualifying taxpayers to deduct certain home expenses from their tax return. Now remember, to qualify, you must own a business, and you must use a portion of your home exclusively for business, and you must rent or own your home. Then we discuss what you can deduct. You can deduct almost all of your home expenses, including your mortgage interest, rent, utilities, and much more. And lastly, we discuss how you calculate your deduction. You can use the simplified approach, which is taking the square footage of your home office and multiplying it by $5, but you can only deduct a maximum of $1,500 with the simple approach. So if you have a larger office or a higher amount of expenses for your home office, it may be more advantageous for you to use the regular method. And again, the regular method computes the exact percentage of your home used for your business and applies that percentage to your home expenses to quantify your home office deduction. And that, my friends, is how you take the home office deduction for your business. If this video helped you out at all, then please smash that like button for me below. And if you want to learn more about how to deduct things like home depreciation or save on taxes in general, then be sure to subscribe to our channel so you don't miss out on future episodes that can help you save on taxes. I'll see you in the next episode.